which are you more bullish on, the mainland China or Hong Kong for 2023?
Well, at this point of time, we're more positive on mainland China, the A shares in particular, for a couple of reasons. If one combines the domestic consumption recovery along with some of the policy beneficiaries, you will find a larger set of stocks conforming to that description in the onshore China market. No doubt, Hong Kong has quite a few of them. The retail-focused REITs, some of the travel and tourism-related stocks, but a larger chunk is clearly in the Asia market, and that's basically what we feel is, is likely to drive the relative performance of these two markets for now.
Manishi, if you're more bullish about China and the Chinese recovery, what are the biggest risks? And I suppose this also extends to equity markets if you're talking about the Hang Seng in 2023 for you. Is it the property sector? Do you see any improvement there? Or is it something else that we're not necessarily looking at all too much right now?
I'll lay down what, what we feel are the positives for China and what are the risks that we perceive. Well, the main positives are the broad-based consumption recovery. I think this whole reopening story is now translating into a broad-based consumption recovery, which is percolating down to e-commerce, internet, restaurant chains, travel and tourism, even airlines and airport stocks, and so on. And you have a whole host of them to play in the onshore China market. In addition to this, you also have the policy beneficiaries. We think that the incentive to high-end manufacturing, to infrastructure, to semiconductors, which the Chinese policymakers have talked about over the past 3 or 4 years, they're likely to continue and accelerate. Therefore, these are the two big themes that we are actually playing in China. We also have some weight on financials, a combination of the SOE banks and the retail-focused banks, because we think that not only do they give a combination of high dividend yields and also reviving growth, they're also participants in this whole reopening, consumption revival and policy beneficiary story. What we're a bit cautious about is the property sector, despite the pronouncements, despite the policy tailwind that has come through. There's still a lot of unsold inventory over there. Prices are still declining. Companies on an average are still highly leveraged. So, while we might play in the sector indirectly through retailers or consumer discretionary or home furnishing, those kind of plays, but direct exposure to property is something we're avoiding for now. And we think that for a job revival, the employment revival, ultimately the property sector will have to come into play, which is possibly not really happening in a big way right now.